Hello and welcome to another episode of IPO KYC. The company today is Fractal Analytics, set to be India's first pure-play enterprise AI company. They're looking to raise a little more than 2,800 crore rupees with a market capitalization of 15,500 crore rupees. And it also comes at a time when there has been a global tech wreck. People are questioning the valuations and the operating business model of so many software companies globally. Srikanth Velamakanni, the co-founder, CEO and Executive Vice Chairman, and Ashwath, Bhat, CFO of the company, are now joining in. Gentlemen, thank you very much for joining in. First, explain to us, you are an agentic AI company, you sit between an LLM and an enterprise. And now people are fearing that there is going to be a risk of disintermediation. We're not going to need the middleman anymore.
See, AI is like electricity, and LLMs, large language models, are essentially powering this electricity. And what we expect is that AI should be able to convert any data into intelligence and provide this reliable intelligence layer to everybody. So when the electricity revolution took place in the early 20th century, the biggest companies that benefited were the companies that were making the appliances, the microwave ovens and the refrigerators and the TVs and so on. These people took the new technology called electricity and brought real solutions to real problems for the vast majority of the world. So taking an AI view, the LLMs provide the electricity. You need the appliance makers to build the kinds of products for every product, every service, every process of major enterprises. So think of a big consumer goods company, right? They spend, let's say you're in $100 billion consumer goods company, you spend roughly $20 billion on what are called as trade promotions. These $20 billion, if you can intelligently spend them, you can grow your revenues much faster than otherwise. So you need these LLM powered intelligence, and then you have to solve this specific problem: how do I allocate spends across my trade in the entire year? So Fractal brings in a platform called Asper, which takes this intelligence of these LLMs, then solves these problems for the world at large. And therefore companies like these have a very strong play in, as AI progresses, our relevance in the world goes up.
So just to take the example that you are giving, 3 years back, 2 years back, the LLMs were electricity. They were providing the infrastructure. Then came in companies like yours, which acted as the AI orchestrator, the intelligence layer, which used that electricity to build appliances. But now, these big companies like Anthropic's Claude have also entered into the appliance making business, because they have released plugins which cater to legal, they cater to the CRM space, and people are saying they're very good. The level of hallucination, the level of efficiency, etc. So they're directly competing in your space. Is that not a risk to your business model?
So the way to think about this is that yes, LLM provides a horizontal significant intelligence layer, and this intelligence layer is both becoming better as well as cheaper. And then the opportunity is to take a specific problem and solve it, multiple problems. The number of problems we can solve are infinite, like really infinite. Across industry, you take wealth management, okay, well, how do you help salespeople in wealth management sell better? Or how do you help consumer goods companies do trade promotions better? How do you healthcare companies diagnose illnesses better? So each of these use cases are infinite in nature, and therefore there are many companies that will come in that will leverage the power of AI to solve specific problems in a more effective way, and therefore build out a great business of theirs. So Anthropic is doing in a few areas, Fractal is doing in a few areas, and other companies will do it in other areas as well.
But they have multi-billion-dollar R&D companies. So today they're doing it in a few areas. Tomorrow it'll be in all the areas, including the spaces that you operate in, like Vedya for healthcare. Isn't there going to be a market share erosion risk or risk of pricing?
Across the world, this is such an evolving space, in such a large space. There'll be multiple players, multiple winners doing multiple things. And so Fractal's focus is enterprise AI, which is the hardest part of AI, is translating enterprise AI excitement into enterprise performance. The biggest companies in the world that have complex software structures and databases and so on, and hundreds of thousands of users driving decisions inside companies using AI. So that is a space that is currently not yet taken off in a very significant way. So that is also, in that terms, there are very few companies in the world that understand it. Even Anthropic and OpenAI, etc., don't have a full understanding of how enterprises really work, because they have not solved those kinds of problems. So Fractal is well placed.
So no risk of disintermediation, no risk to the business model for you.
We are the disintermediating or disruptive force that's saying that your existing technology stacks don't do a good job. Use AI to power decisions directly using these models. So we feel we are the disruptive force right now.
Right now. Okay. What are the tech spends purely catering to the area that you operate in?
So overall, companies spend roughly 4 to 4.5% of revenue on technology, and that is going up from 4.5 to potentially 6%. A third of that spend, roughly 2% of world revenue, is the spends that Fractal and other companies like Fractal address.
And since you said that LLMs generally are getting faster, smarter, and even commoditized to some extent, prices are coming down. So is that a risk to your margin, or the revenues of yours will shrink? Is there a margin risk?
What happens is that you have to think of it as electricity again. So when electricity rates come down, your appliance usage actually goes up. You'll use your air conditioner a lot more if your cost of your electricity is much cheaper. So as LLMs get cheaper and even commoditized, the people who add the value added layer, they are the ones who will benefit significantly, because they can use a cheaper LLM and power phenomenal decisions, and they and benefit from that and benefit their clients with that.
Has anything that Anthropic's Claude released which directly competes in the space you're operating in, any of the 11 plugins?
Not today, but we do use Anthropic, OpenAI and our own reasoning models in order to drive this, and so therefore it is a way in which we get better.
Okay, let's get back to business then and numbers. Now your FY23 to FY25 revenue growth was about 18%. Now, considering you positioned yourself as an AI leader, you're an AI company, shouldn't growth have been higher?
Our growth, yes, it can be higher, and we expect, see, the big change that I'm seeing is that consumer adoption of AI has been phenomenal, right? For example, ChatGPT, 800 million weekly active users. It's been one of the fastest adopted technologies ever in the history of business. When it comes to enterprise, this hasn't been the case, because of a very good reason, that AI excitement does not automatically translate into enterprise performance. Like I said, enterprise systems are very complex. They have thousands, hundreds of thousands of databases and the data sources, and a lot of that is structured data. So most of the AI progress has happened on unstructured data, which is video, voice and text. When you bring it to structured data, that things that can be in rows and columns and spreadsheets and so on, that's where you don't see enough AI progress. So what Fractal is doing is bringing that AI and going into enterprises and driving that adoption. As enterprise AI adoption takes off, which will happen in the next 2 to 3 years, we expect accelerated revenue growth.
So FY25 growth rate was 25%. I mean, can you, in the next 2 to 3 years, keep at this 25-30% kind of revenue run rate?
Look, we'll be disappointed if we don't grow that fast. That is the opportunity is huge. We have to obviously execute, but the opportunity in the AI space is mind-bogglingly large.
Yeah. So the slowdown in discretionary tech spending, which hurt the Indian IT services company in the last 2 years, did it impact you all?
Not really, because we are not operating in the tech services space, and therefore in fact what we see is a significant tailwind of how enterprise AI is starting to take off. That's what we are seeing. In general, macroeconomics have an impact on everything. For example, any trade wars or any such things do have impacts, because it means that companies, the biggest companies in the world, are uncertain about their spends. So when that happens, it will impact everybody in a uniform way. So to that extent, we are all impacted by that. But there is a significant tailwind of AI and enterprise adoption of AI.
Ashwath, on margins, FY25 margins were about 17.5%. In the first half of the year, adjusted margins were 15%. What are the steady state normal margins for a company like yours?
If you again look at our historical performance, margins have improved considerably over FY24 versus FY25 was significantly higher. And again, if you look at the first half of the year, it was 15% versus 15.9%. So there's always a little bit of seasonality between first half and second half of the year, as you can see, versus the last year.
So what are the steady state normal margins for a company like yours? What is the long-term aspiration on margins?
Our gross margins are in the 46% range, and Cogentic, which is our enterprise agentic AI platform, there the margins are significantly higher. So as Cogentic becomes an increasing share of our overall revenue, our margins will trend upwards. Even in the rest of Fractal services, we see that our margins are actually trending upwards. So we expect margins to go up, and you'll be happy if it is in the 50+ range. And the gross margins are in that range. That's where we're taking it. Our EBITDA margins are also improving significantly, because some of our costs we are using AI significantly in actually reducing our own G&A related expense as well. So there's a tremendous amount of work in using AI inside Fractal. For example, our entire hiring is now automated through our Ikigai hiring platform. We're using AI to even accelerate our own accounts receivable or our own claim settlements and things like that, which is all accelerating Fractal's revenue growth as well as reducing the costs of Fractal.
So there's a big difference in adjusted margins and the margins, reported margins, and that's on account of ESOP costs and expenses. When does that normalize?
So the good news about this is that every Fractalite is a shareholder, is an option holder and soon be a shareholder. So Fractal has created this sort of, our culture is such that we have sort of distributed the wealth creation of Fractal to all Fractalites. So that's a really good part.
So every employee has
so 5,000 people. People who have joined on or before a certain cutoff date are all option holders. So about 5,000 Fractalites have options. So they'll all benefit from the IPO. But it also means that that expense we recognize today. So most of the ESOP issuances have happened. We don't expect significant future ESOP issuances without shareholder approvals and so on. So we expect it to normalize as early as this year and certainly by next year.
So margins should trend up, and the key driver for that will be increasing contribution from your agentic AI platform, Cogentic. And that will drive gross margins from the current 45% to 50% plus. How much does Cogentic contribute to your revenues, and when do you get to 50% plus? What's the target here?
Today, subscription and license revenues contribute about 3% of to the revenues. We expect it to continuously go up to as high as 20 in the next 3 to 4 years.
3 to 4 years.
And I think doing Fractal on Fractal is an important thing. As an AI company, we want to ensure that we embed AI in every process of Fractal. That's another big driver for our margin growth as we move into the future.
So let's talk about Fractal Alpha, which is your incubation platform. While it's growing very fast at the top line, it's still making losses. What is the internal target for turning it around? When does it EBITDA break even?
So it's already improved significantly in terms of profitability. We're already seeing some of the elements of Alpha businesses starting to break even. So we expect that to happen in the very near future.
Next 1 year?
Next 1 year.
How much have you invested in Fractal Alpha, in incubating these startups so far?
Do you have the number?
I think we have disclosed that in the RHP. So yeah.
So we, just to clarify, for example, we have created Cure.ai.
Correct.
Cure.ai is the preeminent healthcare company of our times. It is in the Time 100 most influential companies of 2025, and it has touched more than 40 million lives. It has 19 FDA clearances, and what we are doing there is using AI to diagnose for tuberculosis and lung cancer and many other diseases. So we expect that these sorts of companies will have a transformational impact in the world. And now it's no longer a Alpha company; it's an associate company. But we do own 32% of Cure.ai.
And I believe its valuations are close to $250 million as per the last round. When is it looking to do an IPO? Because that will be a bumper for you then.
We don't have any specific plans today around Cure's IPO, but as a Fractal shareholder, you obviously are a holder of Cure as well.
So even 355 crore of the IPO proceeds will go into Fractal Alpha. Can you explain that? What is it driving at?
355 crores is mainly between Fractal AI and Fractal Alpha into R&D and sales and marketing. So yeah, around 2/3 of that is going into Fractal Alpha. So broken up into R&D and sales and marketing within Fractal Alpha. So within Fractal Alpha, our focus is on driving very high growth and keeping a very high gross margin. So that those two are the main things that we drive in Fractal Alpha.
Have there been any investments under Fractal Alpha which you've had to write off because technologies move too fast?
Yes, absolutely. The creative destruction is very important, and one of the things that we have learned over the last few years is to also kill ideas that don't work. So what we have done is we have either sold off. For example, we created an AI for investment business called Theramin.ai, which we sold to a hedge fund 2 years ago. We had subsidiaries called Crux and earlier Customer Genomics and Trial Run. We have coalesced and combined them, and some of the elements of that have become part of the Cogentic platform.
Is there been a number for the write-offs related to companies which didn't work or technology obsolescence?
I don't have the number offhand, but we certainly do recognize that what is not working has to be either pivoted or has to be closed, and that's the way in which, see, AI is moving very fast, which means that the companies that the technologies are changing, and therefore when we create something new, and if it's not working, we repurpose the talent and build something new with that
Technology
IP.
is now moving fast, Srikanth. It's at breakneck speed, which brings me to the question of technology obsolescence. That is a real risk for you, right? How much do you spend on R&D, and how does it compare with global peers?
So we spent 6.1% of revenue on R&D for the last 6 months, for 6 months of this fiscal year, and we expect it to be higher. Now, typically, product companies, the best product companies in the world, spend about 14% of revenue on R&D. Services companies spend 0% of revenue on R&D, 0 to 0.5% of revenue on R&D. We are at about 6 going to 7 and potentially higher. We will expect it to be going up, not just on its own, but also as a fraction of our revenue. It will go up, and this is important. We want to be the most innovative AI company out of India, and we want to make sure that our R&D spends are reflective of that.
Does it get as high as 14% of overall revenue?
We are going in that direction. We may not go all the way to 14, but we certainly want to take it up.
You want to take it up. Let's talk about valuations. Market capitalization is 15,500 crore. Your adjusted profit for the first half of the year is 143 crore, which means if I annualize it, I'm getting a PE of close to 50 times, even accounting for the dilution on account of the fresh issue, or price to sales of 4.8 times. Who have you modeled the valuation on?
We haven't modeled the valuation on any one company. I mean, there are a bunch of companies out there that one can look at. Palantir is a great example, who's trading at phenomenal revenue to market cap ratio, more than 100 times forward revenue of. So we expect that some of that kind of transformation we can show at Fractal as well. Fractal today is, for example, Palantir did an amazing job of growing their revenue significantly without increasing their headcount over the last 2 to 3 years. We expect to,
So that's the company you emulate globally, Palantir?
Yes, Palantir is a company that we do think of highly, very highly.
And what are their margins, gross margins and EBITDA margins?
They have increased their gross margins significantly. I think I don't have the exact numbers, but they have significantly taken it up over the last 2 to 3 years.
Yeah, no, their gross margins are above around 80%, and yeah, they have done a great job of managing both gross margin and up to net income. Yeah.
Why did you bring down the amount that you were looking to raise by nearly 40%, 42%? Was it market conditions or something else?
See, once we agreed on the pricing for the Fractal IPO, the selling shareholders wanted to stay on.
Were they disappointed because they got in also at a higher price? Your valuation in the previous round was higher than 15,500 crores. So in a way, your valuations come down.
Yeah, so all the selling shareholders are in the money. This is not, they're significantly higher than their when they entered Fractal. So they're all making money, and we've had a good track record of making money for our shareholders throughout our history. Every exiting shareholder has been very happy with Fractal. We want to continue that. At this point of time, at the current price, many of the selling shareholders decide that they will continue to stay on rather than sell more of their shares.
So promoters have 20%, they're not selling in this IPO. Yes. But you still have a lot of PE shareholding. They will partly exit, but what will be the PE shareholding which remains? Because that's the risk of supply in the future.
Yeah, the PE shareholding remaining will be close to 30% of the company, depending on where the price band settles. Yeah.
30%, close to that. You're also looking at inorganic acquisitions. And I think have you earmarked anything, 500, 700 crore, or there is no money amount that you've earmarked?
Typically, we don't allocate capital ahead of time without or set up any targets for acquisitions. We don't do that. If we like a company, we will absolutely be willing to acquire. But and we do look. We have a pretty significant pipeline of deals that we look at any point in time. But we will do it only if we feel like it's an amazing deal worth doing, and we don't put any pressure on ourselves to have to acquire companies.
Are you close to acquiring any company, and how are the valuations now? One would suspect they're very high.
Yes, AI is an exciting space, and therefore, if the AI company's valuation is not very high, you should doubt it. Having said that, I think there are some very attractive companies out there. We are certainly continuing to look at it, but we don't have any specific plans for any acquisition as of right now.
So you're a 25-year-old company or a 25-year-old young company? What are the next 25? I mean, what's the long-term projection for Fractal Analytics?
So we are just getting started. Yes, it's been 25 years of setting up Fractal and bringing it here, but it's a 100-year journey. We're just getting started, and the plan is to make Fractal one of the most significant enterprise AI companies in the world at any point in time. So we would like to do that, and we want our place in the history of AI, and that's the intention.
So 2 risks that you've highlighted in the RHP, I'd just like to quickly touch upon it. One is the high top 10 client concentration at 54%. Are you comfortable with this level, or would you want to bring it down?
It's moving in the right direction if you look at
So
the last 3 years. Yeah, it's coming down. I think we are focused on serving the best of the companies in the world, what Srikanth called as 10, 20, 30. So it's not not something that we kind of actively try to manage, that okay, we need to bring it down, but we are happy with the trend that we have seen so far.
Can it come below 50%? Is that the goal, or even lower?
Again, it's not actively managed.
Got it. Who are the must-win clients for you?
Again, we have reported some of them, we have not reported some of them. We serve some of the most impressive companies on the planet, 5 of the magnificent 7 companies, tech companies, are the largest consumer goods companies, I think top 10 consumer goods companies, and so on. So we have significant client presence, but again, because of various confidentiality reasons, we don't mention their names.
And 65%, the other risk is 65% of your revenues come from America.
Yes.
Are you looking to increase the presence from Europe, APAC? What is the growth that you're seeing in these different geographies?
Yeah, we would like to grow across all the 3 geographies that where we are operating right now. Americas has kind of stayed close to 2/3 of our revenue for a while right now. I think if you see the last 6 months, Europe has gone up to around 20%. So, but again, it's ultimately an outcome of how each of our clients are doing in these geographies. So we don't really see any specific risk because US is 2/3 of our clients, because most of our 10, 20, 30, our ideal client profile, if you really look at it, tend to operate out of the Americas. So that's the reason why it is almost 2/3 of our revenue.
Srikanth, one final question. You're leading India's AI sovereign ambitions. There is a big AI India Impact Summit that's going to happen this month in Delhi. I mean, what is the agenda behind this? Because all the big guys are coming from the tech world, Jensen Huang, Anthropic, and you name the company and they're going to be here in India. So what are you trying to drive at, and what are India's AI ambitions?
Number one, AI is a transformational technology that's going to change the world. And this AI Impact Summit is one way to track, measure progress, and see what's coming up next. And also some of the biggest leaders in the world of AI getting together. So it's great that it's happening in India. Last year it happened in Paris. This year the idea is to not just celebrate the best of AI in the world, but also show that a lot of this great AI is coming from India. So we will showcase some of the best Indian AI startups out there. Fractal is part of the India AI mission. We are one of the 12 companies that India AI mission has selected. We're building a large reasoning model for India for healthcare. Our goal is, our vision is to see if we can create healthcare AI services like the Aadhaar stack and the UPI stack. Can we create a health intelligence stack for India? That's our goal, and we'll hopefully showcase some of that in the AI Impact Summit.
When will it be ready, the AI healthcare stack?
Sometime this year.
Sometime this year. How much have you invested in it? Or
so this is the overall part of India AI mission. The budgets are roughly about 150 crores around this initiative.
Thank you very much. Wish you both the very best, and the company too. Thank you very much.
Thank you, Rima.
Thank you for watching CNBC TV18. For all our top stories and news updates, follow us on our social media platforms.